Since 1930, roughly 40 cents of every dollar the S&P 500 has ever made never showed up in its price. It's invisible. It doesn't show on the chart. It doesn't trend on social media. And whether you actually capture it comes down to one toggle in your brokerage app, a toggle most new investors never touch. By the end of this video, you'll know exactly what that toggle does, why it's been quietly doing nearly half the market's heavy lifting for over 90 years. And the one decade where it did over 70% of the work. It's not the decade you'd guess. First, the basics, fast. A share of stock is a slice of a real business. When that business makes profits, some companies pay a slice back to their owners, usually every 3 months. That payment is a dividend, real cash, dropped into your account for doing absolutely nothing. Now here's where most new investors get tripped up. There are two scoreboards. Price return is just the line on the chart. What the index is worth today versus what you paid. Total return is the price, plus every dividend reinvested, buying more shares immediately. Since 1930, when you add it all up, dividends and their reinvestment have accounted for roughly 40% of the S&P 500's total return. 40%. Nearly half the wealth this index ever created came from cash payments most people never think twice about. And the reason reinvesting matters so much is the loop it creates. Your dividend buys more shares. More shares pay bigger dividends. Bigger dividends buy even more shares. It's a snowball, but you only get the snowball if the dividends stay inside the account. Quick math. Rough, illustrative numbers. Say you invest $10,000 and the market averages 10% a year, with about 3% of that paid out as dividends. Investor 1 takes the dividends as cash and spends them. After 30 years, roughly $76,000. Investor 2 flips the reinvest toggle. Same market, same stocks, same 30 years, roughly $175,000, more than double. The only difference was one setting. Now, the decade I teased, the 1970s, sticky inflation, gas lines, and a stock market that went basically sideways on price. Ugly decade. And yet investors who reinvested dividends did okay, because in the 70s, dividends accounted for roughly 3/4 of the index's total return. 73%. The price chart looked dead, but underneath the dividends were carrying the entire thing. It happened again in the 2000s. They call it the lost decade, after the dot-com crash, 10 years where the S&P 500's price went nowhere and finished slightly negative. Flat red line. But with dividends reinvested, that lost decade roughly breaks even. Dividends didn't just help, they were the whole difference. So why does everyone under 40 ignore this? One reason? The yield today is small. The S&P 500 pays out around 1.3 to 1.5% a year. On $1,000, that's like $14. Feels like pocket change, feels skippable. But two things. First, companies raise those payouts over time. Dividend payments have grown roughly 5 to 6% a year historically. Today's pocket change compounds into tomorrow's paycheck. And second, the fix is stupidly simple. It's called a DRIP, a dividend reinvestment plan. In most brokerages, it's one toggle per holding. Reinvest dividends, yes or no. Click yes, and every dividend automatically buys fractional shares the moment it lands. Usually no fees, no decisions, no logging in. It's autopilot for compounding. Two honest caveats before you run off flipping switches. 1. In a regular taxable account, reinvested dividends are still taxed. You never saw the cash, but the taxman did. 2. Dividends are not free money. On the ex-dividend date, the share price drops by roughly the dividend amount. So what you're really choosing isn't magic income, it's automated compounding. No friction, no timing, no excuses. That's the whole trick. So let's close the loop from the top. Since 1930, dividends did about 40% of the S&P 500's work. In the 70s, 73%. In the 2000s, they saved the entire decade. And the whole mechanism turns on one free toggle that takes about 10 seconds to switch on. If you take one thing from this, open your brokerage, find the dividend reinvestment setting, and just turn it on. Then let the invisible 40% do what it's done for over 90 years. If this was helpful, there's plenty more on the channel, and honestly, the follow button is the other one-click setting worth flipping. See you in the next one.